Welcome to CEO Money. I'm Michael Yorba. Thanks for joining us. I have Oscar Bartolomei, Director of Oscar Bartolomei Finance, coming to us from Switzerland. Oscar, welcome to the show.
Thank you. Thank you for inviting me.
My pleasure. Give us some background on yourself and your independent family office and why this is the proper choice.
Okay. Just a few background. Till 2007, I was working as a private banker here in Geneva, and I was thinking, in fact, how could I better serve my clients? And I used to manage a lot of portfolios, but it was just a part of the client wealth. And the idea was, in fact, to be able to have a complete, let's say, view on the wealth of a family, including the assets. So in 2007, I opened my first family office, where I was in charge not only of the portfolio of a family, but also of the real estate, art collection, of course, inheritance, of course, tax issues. And that's extremely exciting because you can really, in fact, think about, okay, today my role is to give the next generation, let's say, at least the same wealth that the grandparents or the parents have today. So that's the challenge today, and it's pretty exciting, yeah.
All right. Now, talk to me about the asset management of the art collection.
Okay. I'm, let's say, what I try to do, I have some, let's say, some questions from my clients. Some of them is, I have an art collection. I have no idea because I was buying. Today it's so huge. I have no idea of what I have in my art collection and how can we manage this. So part of my job is to find, let's say, the professional that is able to to just summarize and let's say categorize an art collection. That's one of the questions I have. Another question I have coming these last 3 years because we have very low interest rate. Some client told me, okay, should I invest in art and how? So the idea is to build a kind of art portfolio, like an asset management portfolio, but with art. And the idea is to have blue chips, so very, let's say, good names in terms of art, of course, Picasso and those very strong names, but also what I call small caps. So to try to identify the future Picasso, at least one if we can, and build a portfolio with these blue chips, let's say, names that are exactly that, right. Strong names, value names. We know that we are not going to lose value on those names, and small caps with that I can compare to very dynamic shares. The idea is to invest in this and try to find the new star in terms of art. Then we have, of course, paints.
Let me interrupt. I want to ask you a question about this. Right now, we have an economic condition on a global basis where we're seeing at least a 10% pullback in the stock market across the board.
Exactly.
I wanted to understand better the lack of volatility in investing in art when we're in times like we are. Could you give me your impression there?
Yeah, you're right. If we take contemporary art, it's extremely volatile. What we try to find, as I told you, is the blue chips, the very well-known, and some names that are still not under speculation. That's the whole matching is to find, let's say, some art pieces from, let's say, 10,000 to 50,000 that are, we try to find them out of the market. In sense of people heard about this artist, but not so much. We try to be invested in this kind of out of speculation art collection. It's not easy. I'm not an art specialist in terms of this kind of job. I'm working with a lot of people. Some of them are just specialized in the blue period of Picasso. Others are specialized in Warhol. My job is to make them work together. That's the most difficult thing. Make them work together and try to offer clients a global portfolio that we can fine-tuning, depends on the market, depends on the stock market, depends on the interest rate. Knowing that the idea is always for me, this portfolio should be at least, let's say, keep the same value for the next generation or the second next generation. That's I'm totally out of speculation because it's not my job. I'm not a stock picker, and I'm not an art speculator in terms of okay, we just go to casino, we buy this paint. No, it's not my. There are many people that are doing very well. It's not my job.
I got it. Yours is wealth preservation first through art, and then building the portfolios, obviously cataloging what's in the portfolio.
Exactly.
If I don't know, I get it. Let me move forward, if I may. Your family office business, I'd like to understand where you see this going in the future, because you have a vision for the future. Please share it with us.
Thank you. Thank you very much for the question. As you know, the banking world in Switzerland has, let's say, a big failure was the end of the banking secrecy. That's over, and now the idea is to say, okay, in Switzerland there are still the expertise, to tradition, but it's a new world. So banks have to just to adapt to this new world or to die. It's like dinosaur. The dinosaur on the private banking world in Geneva was, in fact, the banks that still believe that they're going to work with the same business model without the banking secrecy. That's over. So for a family office, I will say it's a major extension of a private banking service. As I previously said, you start managing the assets of the client. Then you see that the client has maybe he's married twice. He has one child from the first marriage and two children from the second marriage. There's an issue in terms of inheritance. Then the question is, are the children going to manage the company of the father? Maybe they don't want. So those issues, art collection is of course one, real estate is another one, tax issues is of course a major concern. That makes the family office very, I would say very useful, because today with, for instance, we have now in terms of tax issues, 103 countries sign an agreement to exchange banking information. Means today, if you are a French one, and you open an account in Switzerland, Switzerland is going to provide this information to France. At the same time, if a Swiss person opens an account in Italy, Italy is going to say to Switzerland, Mr. X has an account with us. So this word of this totally transparent new world is very useful for a family office, because we cannot offer those solutions, let's say, in the other world. We really have to deal with transparency and clarity. So that's, for us, it's a big, let's say, it's a big step, because now everybody has, by law, to work on this new world. So for us, it's very interesting, because the way we used to work 10 years ago, that's always transparent and clarity, is the general rule today. So for family office, let's say I would say it's a very exciting new world, because in fact, we used to work in this new world 10 years before let's say the private banking business model.
Now, let me move forward. You also work with professional athletes. Is that something that has a different structure in it than your normal family office client?
Okay, this starts from 10 years ago. I was just reading about football. Let's say, as you say in the United States, soccer players, we say football players, but it doesn't change anything. And I was just checking and say, okay, those guys are very young when they start to be professional. They have 18, 20s. Obviously, it's not their job. Maybe they don't have the expertise to manage the assets. It's not their job. I mean, if they are a soccer player or basketball or whatever, their job is not to manage the asset. But they have exactly the same concern as a traditional family office client. Means tax issues, royalties when they sign contracts, asset management, and the time constraint is much, let's say, it's extremely present because they only have 15 years, maybe, as a top athlete, they only have 15 years where they have to maximize the revenue. But then, what's up? So I started thinking about this and said, okay, in fact, in this particular field of professional athletes, my first duty is to, keep all the things clear today in terms of the royalties are really going to the athlete, the tax issues. For instance, you have a tennis player, he's playing in Texas, he's playing in Buenos Aires, he's playing in Roma. Those countries, they have specific taxation regarding revenue generated by professional athletes in their country. So those things are, let's say, clear. Step two is where to invest to keep the same level of revenue once the athlete has retired. You will know that in Europe, 80% of the football players they have no money after the career. They lose everything because they have a very good friend. We say, okay, we can invest there, and it's total failure. So my job is to preserve the wealth of the athlete. It's not easy, but sometimes you have to deal with a 25 years old football player who wants to buy one Lamborghini on Monday. I'm exaggerating. Next month, a Ferrari. Say, maybe you should buy one. It's enough. That's the kind of funny things we have to deal with. But the idea is to preserve the wealth and for the family of the athletes. Because normally, of course, this kind of field, it's not common that a wife is working, for instance, right. Because the athlete, he's traveling with his whole family and blah blah blah. So my job is to try to preserve the wealth today for tomorrow, knowing that in 15 years the athlete will have no revenues. Maybe I like the case of Roger Federer. I would like to have as client. He's preparing his retirement 5 or 7 years ago. He signed all the contracts to guarantee that he's going to generate the same revenue in 5 or 10 years than today. That's a masterpiece, really.
Tell me about digital disruption in the private banking world. This is a whole new world, and I'd like to get your perspective on it. Yeah.
Private banking, let's say, till five years ago, was still very classic in the management. So it was asset management, by banks through bankers. The cycle was extremely, let's say, very clear. It's bank to a client, but if you wanted to open an account out of a bank, it was impossible. If you want to be, let's say, to manage your assets out of a bank, it was impossible. Then what's up? We have some companies that, let's say, their culture, their business culture, was not coming from the private banking world. Typically, people that, let's say, between 25 or 30 years old, that say, no, we don't need bank. What we want is, let's say, an Apple application or whatever, where I can just manage my mortgage, I can manage my asset, I can transfer my funds wherever I want, I don't need a bank. And this disruption was, let's say, from a Swiss banking perspective, was very rude, because don't forget, the private banking system here has more than 100 years of tradition. Imagine that the client said, no, I don't need you. I can just, I have robot advisors going to manage my assets. I have an application to renew my mortgage. I have another one to find the best funds available. So that was extremely, let's say, difficult time for banks. The reaction they had, even I think it was a bit too late, but finally they had, let's say, a good reaction was, or to buy the startups. So they say, okay, those guys, they are just building an application to get new mortgage. The bank buy let's say the company, or in-house they build some replica of those applications or those disruption. Today, all the banks have robot advisors. That's the future, let's say, for accounts still 5 million. They want to implement robot advisor, means no more account manager. All the application you can find about mortgage transfer are now also issued by major banks. So they join this new world because they couldn't survive. Today, if you ask 20, 25 years old person to go to a bank, say, why? I don't need a bank. And that was the major issue for the big names we have here, UBS and Credit Suisse, to make those people still, all need a bank directly going and meet a relationship manager, or going to an application where they can still be a client for the bank. So that's, and I think the future will be more and more this kind of disruption. Today, do you really need a relationship manager? I would say for ultra high network, we say very big clients, yes, because that's join the conversation we have about family office. When let's say those big clients, they need other perspective that not only the asset management, but maybe clients, let's say, till 5 million, they can be perfectly managed by robot advisors. That's the future of the private banking, in my opinion, of course.
What about cryptocurrencies?
Yeah, that's, well, cryptocurrencies and let's say cryptocurrencies and family office. To preserve the wealth of a family, I would say the cryptocurrency is today is, I would say, there's too much volatility to invest in. But at the same time, it's very important, and in my opinion, is that the cryptocurrencies will remain. It's a phenomenon. We can compare to the .com years ago. Mm-hmm. A lot of those .com companies, they just disappear. But we have Yahoo, we have Amazon, Google, and so for the cryptocurrency, I think it will be the same. And of course, I don't know in which form and how. But maybe they will have another Bitcoin, another Ethereum. I don't know, but I'm pretty sure that the phenomenon will remain, and that's important because. Here in Europe, with Switzerland, we hear a lot of people say, no, it's going to disappear, just speculation. No. The fact that today you have people from, let's say, very, very poor countries, in Africa, for instance, or in Asia, that they don't have banks. There's no financial system. They're still able to be part of the globalization through the cryptocurrencies. That's for me extremely important. So I would say to invest in for my families, no, there's too much speculation. But I keep an eye on it because the phenomenon is there, will remain.
I got it. All right, Oscar, thank you so much for being a guest on our show. I appreciate that.
Please. Well, it was a huge pleasure. Thank you.
I look forward to having you on the show again. You've been watching CEO Money with Michael Yorba. Don't forget, like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.
Thank you.